In today's video, I'm going to share why I've decided to transition my focus away from real estate investing. Even though I've been in the real estate industry for quite a few years now, initially as a investor, and then working in the industry in various capacities. And I'm going to share a little bit about what I've decided to put my focus onto. So if you're new to my channel, I've been a real estate investor since actually the age of 18 and 19. I bought my first property just shortly after graduating from high school. And since then, it's been quite a ride. For over 10 years, I've bought 10 different investment properties, ranging from rent to own, student rentals, duplex conversions, a fourplex, land severance deals. So there's been quite a few projects I've been involved in. But more recently, I've decided to take a step back away from real estate. Now, I still own some rental properties. I'm probably going to keep those for the long term. But I have sold off, a bunch of the properties, especially the ones I owned in partnerships, and the properties that were just giving me a little bit more of a hassle. One of the reasons that I've shifted my attention away from real estate more recently is I've just had a personal realization when it comes to what I feel I'm good at when it comes to real estate investing. So I love the process of finding a good deal, running the numbers, seeing how it makes sense, looking for hidden opportunities. That part of the equation, I truly feel like comes naturally to me, and that led to my career. Even working as a realtor, I helped investors in that process, right? Looking for a good deal, analyzing the numbers, seeing if it made sense, looking for those opportunities. The area, however, that has stopped me from really going further into real estate investing more than I have so far has been more of the ongoing management and the ongoing process of taking an opportunity and making it into a reality. And that comes in two forms. One is managing tenants, and the other is managing sort of renovations. Now, usually you find a good deal because it needs some work. There's some value add component to it. And I've done my fair share of renovations. I think I've learned how to do it better than I could, especially when I got started. However, I can clearly see that there's some people who are just better suited for managing trades, managing contractors, making sure that they get good deals on materials, and they bring a project to completion and finding ways to add value while reducing the cost. I've just found that that's not my personality. That's not my unique skill set, so to speak. And the other is more on the property management side of things. It's clearly an area that I feel I understand it, but I definitely don't want to be the person who's involved in the management of tenants, management of properties. And I've found good property managers that I've worked with. They've taken care of my properties for me, but I do feel that on a certain level, if you want to take real estate investing to a higher level, being involved in the management, being involved in the renovations, as well as finding the deals are all critical components. And I just realized for myself that's not the direction that I wanted to go. Now, from the beginning, even when I was getting started in real estate investing, I've been a longtime fan of Warren Buffett and Charlie Munger. When I was working at my old job, whenever there was free time, I would be reading their annual reports. And over the years, I watched all their annual meetings, just consuming any information that they've put out there. And one of the things I found fascinating, especially when they were getting started in their investing. Now, they obviously primarily invest in stocks. They buy pieces of companies, and over time, they built Berkshire Hathaway to the point where they started buying entire companies. But I was more interested, especially in the beginning. How did they get started? And something that they've talked about often is that when you're starting out with a smaller amount of money, and this is what they did, they would look for illiquid stocks, very tiny companies, opportunities that were overlooked where you couldn't really put a whole lot of money into it, but for someone with a small amount of capital, that opportunity existed, and they were able to take advantage of that. And they would be buying companies at one or two times earnings, where the assets in the company was worth more than like double or triple what the stock was trading for at that time. And those opportunities don't necessarily exist right now in terms of the bargains that existed when Warren Buffett got started. But that got me intrigued. And more recently, The area that I've discovered, especially within the Canadian investing landscape, is a similar um, type of market. Um, so in Canada, we have what's called the Toronto Stock Exchange and then the Toronto Venture, TSXV, the Toronto Stock Exchange Venture. And this was founded years ago where many mining companies, exploratory companies would need to raise some capital, and they would use the venture exchange to issue stock, raise some capital from investors, and that's how they were able to get many of these mining related, resource related endeavors started. That would be their way of raising capital. That created a fairly healthy ecosystem in the public markets for small companies to raise capital. Um, and at the same time, in Canada, the venture um, type of investing, so where people invest in startups, give money to entrepreneurs with ideas to get it off the ground, that side of things has really not been developed too well. So what ends up happening, this is what I've discovered, is that many small companies, if they need to raise capital, will go on the Toronto Stock Exchange, especially the Venture Stock Exchange, where the costs to be a public company aren't as high. And they will issue stock, they will raise capital from investors. And many times these are viable companies. Now, I've tried to stay away from the resource related. They call them story stocks, especially where it's a company that has no revenues or has no profits, and it's purely a home run if it hits whatever they're trying to do. And I'm more focused on like small businesses that actually have a viable product, have a customer base, they solve a real need, but they're just small, right? And the unique part about some of these companies is that because they're so small, especially when you look at companies on the the venture exchange that are say sub 50 million in market cap or sub 100 million, they are so small many times that institutions cannot participate in that. Meaning that if you're running a fund that has a few hundred million or $1 billion in it, where you want to put a couple of $1 million into each investment you make, there may not be that many shares available for purchase, at least at the prices that they're trading at. So eventually, when institutions start getting involved in some of these companies, as the companies do well, then they push the stock price higher, because when they're trying to buy more quantity of it, naturally that creates a demand and increases the price until some of the existing owners are willing to sell. So the goal is, anyways, through all of this, what I found is that there are quite a bit of opportunities within that space for profitable, growing companies that actually they're just small businesses early on in their life cycle. There's a lot of risks in this space, I will say. Like, there's a lot of these companies don't go anywhere. They're profitable in some years, and then they lose a key customer. They lose, there's many things that can go wrong. Let me put it that way with small businesses. But when you start small enough, if you have a viable product or service, or you have something tangible that has been created up to that point, especially if it's in a industry or in an area where they're able to keep growing, many times after they get to the break-even standpoint, moving forward, if they can continue to increase revenues, a lot of that hits their bottom line, so they can become very profitable from a smaller starting base. So anyways, that's the general gist of it. And I found myself very attracted to this space. Obviously, the potential to make money is attractive from an investing standpoint, but the part that I like the most for myself personally is that a lot of the work involved in this investing comes from trying to understand these businesses, understand, okay, do they actually have a competitive edge? Are they run by a CEO or a founder who has the ability to take that small business and make it into a bigger business, or is it is there a lot of risks associated with that business? And trying to determine that is most of what this investing is all about. So on the analysis standpoint, and the other standpoint is more on the temperament standpoint, being willing to make a bet, put some capital into a investment, and then to have a business owner's mindset where you're willing to stick with the business for a little while, as long as things are performing, and not trying to trade in and out. I think especially my experience on the real estate side has been, when you put money into an investment, that money is stuck. So like the first couple of properties I bought, I held it for 7, 8 years, right? So I'm trying to take that mindset over into the stock investing side where, especially to start with, I'm looking at many of these companies as a 3-year investment. And then, if something goes wrong, I will exit. If my thesis breaks down, if my assumptions turn out to be incorrect, and if it continues to perform, then obviously I'm willing to hold on for more if I continue to see the upside ahead of it. So that's my thought process with this sort of investing. The broad term for it is microcaps. They're also known as penny stocks, though the investors in this space will consider that slightly derogatory. But I think penny stocks get a bad name, especially when they're promoted by people who are just trying to increase the stock price. With the sort of greater fool theory, where they own a bit of the stock, they're trying to promote it, and then they're trying to sell it at a higher price to people who've been sucked into seeing the price going up and that kind of thing. So that definitely does happen within this space. It doesn't take a whole lot of buying or selling to drastically move some of these share prices. But within this ecosystem, there are also solid companies that are just smaller, that are just earlier in their life cycle. One of the best case studies of this space, or at least the best success stories, is a company called Expel. So back in I think in 2009, they had a technology. So they do paint protection films. So I think it costs like $5 or $6 to wrap a car. And people who own higher end cars, they want to protect the paint on their vehicles. So they had this technology. They had a database of all the cars so that they can print it to fit the vehicle. So anyways, this was a company that was something like a 8 or 9 million market cap back in 2013, when some of the investors in this sort of Canadian ecosystem started discovering it. I think the stock price was something like 10 or 20 cents per share when it was really starting to get discovered. It was a profitable company that was growing very rapidly. And when over the next couple of years, between 2013 to I believe something like 2021, the stock price went from close to 20 cents to over $100 a share. Now it's since come down to roughly $30 a share, but that is one of the most, and even when it reached $100 a share, it went from something like a 10 million market cap to a 2 or 3 billion market cap. So it was like 200 or 300 times the investment of those early investors if they had held on, which by the way is not easy to do because there's so many opportunities along the way where people are like, okay, this is as far as it goes, let me take my money out. But anyways, it's even at its peak, it was still a relatively small stock, right? $2 or $3 billion is not a large cap stock by any means. Many people probably never heard of it even when it reached its peak, but definitely when it was smaller, the opportunity ahead of it was definitely more, because it was simply a small business, and if they could continue to do what they were doing, grow revenues, increase their sales, and just continue plugging away, they had quite a runway. So that's pretty much it. I've decided to kind of make this my focus in terms of how I want to continue my investing over the next couple of years. I think real estate will still play a part in my portfolio. I have 2 rentals right now that I'm planning on keeping. I won't say that I'll never buy another real estate opportunity, but it's something that is more on the back burner for me, whereas these microcap stock investments are becoming more of a priority. It's still, I'm definitely not going all in terms of, putting all of my investments over there, but it is something that I would like to start smaller, and then if I can have some good wins there, I'd like to continue to grow that side of my investing. And something that is related to this and has been a dream of mine for a long time is, at some point, what I'd love the opportunity is to actually join the board of some of these tiny companies. And many times it's an unpaid role, right? it's not really something desirable per se when it's a tiny tiny stock on the ventures exchange. But I the reason that it appeals to me is if I can find a business that I can own a whole bunch of stock in, where it's a material position for me and it's a company that I really see some potential in, and then almost to play a role to help that business reach its potential. Now, I'm I'm not really interested in being the CEO or running the company myself, but I would love to play a role more on the board of directors, just to give some advice, assuming that there is some advice that I'm capable of giving that the CEO or the people running the company don't know. But over time, I feel if I can do well in this investing space, I have obviously the experience of running my own business for many years now. That's just a dream of mine. So not something I'm rushing into, but over the next 10 years, if that's something I can do, I'd be thrilled. So anyways, that was a little bit of an update about where I'm at with my investing journey. Follow along if this is of interest to you. If it's not, completely understand. I built my YouTube channel more focused on real estate investing. And I'm happy to still share some information there. I'm still involved with working with clients who may be buying properties, selling properties. I've personally transitioned more from running a real estate team to becoming a mortgage broker. So my role in that is more on the mortgage side of things. But again, investing is just a passion of mine. It's something that got me started in the real estate industry, and it's probably going to be something that's a lifelong interest of mine, just to be able to find good opportunities and be a good investor. So hope you like this video. Until next time, all the best.